All right, so due to the president election, as expected, there was lots of volatility on the market, and volatility is where we make money. So I made sure to be around the computer and record the volatility trading session for you guys. So this is a kind of a first resemblance of what bull market looks like. Not by any means. I don't think this is a bull market yet, but it's kind of like a first hint of the type of movements that you see in a bull market, and then you'll see the reason why I say so. So I started noticing that the coin on the right and the left is called X. It was recently listed on Bybit. After listing, it crashed a lot, but now in just today, I think it grew something like 80% or something crazy. So I'm being careful because this is very at the highs of the coin. However, because of the volatility, I started to notice that whenever it gives fast moves down, like you see on the left there, not on the left chart, but you see the trade that I made on the right chart, with the black X being my entry price and the blue X being my exit. So I'm preparing for something similar to this. So either it's gonna create a new low or it's gonna create a similar type of move to hopefully enter long and get a few percent profit. So let's see what happens. Okay, so I'm positioning myself right here. So you will see me zoom in a little bit just to see volumes better, and so I market enter the trade. Now the question is, so I'm looking at 2% profit because I'm being careful because the coin is at the highs. However, so here you notice me exit at like a little less than 2% profit. You will see that I could have actually carried the trade way higher, probably more like 6 or 7%. However, so the reason why I'm exiting so fast is because the coin grew over 70% in a day. So like I'm starting to see some sort of distribution patterns at the highs. However, what the mistake here was is that if you look at the Bitcoin, because of the U.S. election, it's breaking the highs. It's going parabolic on really good volumes. So what I should have done instead is that I should have tried to carry this trade further, especially seeing how the one on the left went. So that's a slight mistake, but it's okay. So on the other hand, like if for example Bitcoin was trading in sideways, this would have been the right move to do. So I'm just so basically here I just don't have a full trust in the coin, and it's okay. It happens. Like as long as the risk management is there, um, this is not technically like a mistake that lost you money. It's just I could have made a little more. So yeah, so let's continue. So, but the what you will see me going forward though is that I'm always thinking and I'm always observing. So like here, what I'm thinking is, all right. So the moves are actually a bit longer. I should try to carry the trade. So one of the good strategies here could be splitting that one order into multiple. But my next trade, I'm gonna be a little bit more patient to give the coin to go a little further. The coin on the right is the Dogecoin. It's also been going parabolic because of the whole Elon Musk and his Department of Government Efficiency thing. Here, what with these coins, because the different coins on the market are like lighter type of coins, like the X for example, and heavy coins like Dogecoin. Heavy being like it's just the market cap is so high. Some of the things that I'm starting to look for here is that these kind of coins, the heavy coins, they a lot of times start to exhibit waves. So you don't see those on TradingView. However, here what they're gonna start doing is that they're gonna start on really big volumes. They're gonna start creating like a really clean waves up and down, and then you can really scalp those. Like those are some of the best money making machines out there. So I'm waiting for either waves to start appearing, or I'm waiting some for a very fast retrace. So this is a different coin. This is not Dogecoin, by the way. So let's actually talk about this trade a little bit. So this was a slower type of move. Okay. However, this coin is grass. So what I've noticed is that on TradingView, it's actually had it was really close to all-time high for that coin. So what I tried to do here is I tried to long a first retrace from the all-time high, thinking that because of the Bitcoin and other stuff, it will actually squeeze through and give like a maybe 10% squeeze or something like that through all-time highs. So as you can see here, I'm being patient. So I'm applying the knowledge that I got from the X coin, right? So normally I would have probably exited on like that first bump, but instead I'm trying to carry the trade further to see if it's gonna break all-time highs, hopefully, and then get a little bit more profit. Now this retrace was a little bit slower than usual. So, but the reason why I still entered the trade is because of the Bitcoin. So Bitcoin was going like crazy, crazy parabolic. I mean, so the thing here though is, so I'm already thinking that it's probably not gonna break all-time high very well, because see how like every single time it tries to go up, the retraces are actually even more than the amount of percent that it went up by. So I'm kind of, so that's can be considered as a weakness. So here I should start already thinking about exiting, and I do exit. So I should have probably exited on that bump right there, but it's okay. So this was a more or less like a 3% trade, which is much better. So going back to what I was saying to Doge about Dogecoin, so I noticed I noticed that Dogecoin is going parabolic as well, and what I'm looking for, so I'm always keeping kind of my eye on it, one way or another. So what I'm looking for there is either a crazy squeeze that goes past the highs, or I'm looking for waves, or a very fast retrace. And whenever a fast retrace is going to be happening, I would be looking at Bitcoin spot price to see a divergence, like I explained in one of my previous videos. So yeah, so now let's just kind of continue observing and just so what I want you to do here, like if you're trying to watch this video with educational purposes, I'm trying to kind of absorb the price action and feel the price action, because that's a lot of what scalping is about, is identifying opportunities that have high percent chance of a balance in this case. So right now we are obviously in that kind of situation. So just observe the price action and see how fast it reacts when it sees a certain volume exit the market. By volume exit the market, I mean sell volume. And what happens here is this is Dogecoin right now, so I'm noticing like a very interesting shots through the order book on futures. That those don't happen very often, but you can see those kind of long-tailed ones. This is a like a $10 million market order for purchase. It doesn't have enough liquidity to get filled at that price, so it actually shoots through the order book a little bit. And you will see some trades on Bitcoin, sorry, on Doge here in a second. So like definitely stick around for those, because those are quite interesting. But for now, I'm just you can for now use this opportunity to just kind of see how I navigate through different charts to find action to trade. So because this would be very helpful for you as well if you are trading with this bot already, or if you are thinking about trying to trade with the bots. See, now I'm noticing that those shots through the order book on the left, I kind of put a short order right there for 20k, just in case something shoots through the order book and kind of collects me. Those just a quick and easy profit. But looks like it actually wants to retrace further. So this is the first signs of low time frame distribution. So this is the first kind of hint that a pullback is nearby. Now with these kind of pullbacks, whenever something grows this much like a Dogecoin, you can and then Bitcoin breaking all-time highs, you can feel pretty confident to long first pullback, and you will see why. So like whenever something goes parabolic and then it gives its first kind of really good pullback, by really good on the coin like this with this such growth, I mean something like 5% pullback or so. Those have like a very high percent chance of um, a very high percent chance of bouncing, especially when there is some sort of reason why they are growing, and the reason being right now is the election. So yeah, and some of these trades should be coming up shortly on Doge. On Dogecoin, I feel confident trading with larger size. So like some of the other trades that you saw on Grass and on X were only $3,000 order because I don't have much trust in these coins. Like I haven't traded them for a while. So I and then because of the risk management, I understand that if I'm wrong, it can kind of drag me further down. So I'm being somewhat careful there. Uh, if I were to see, for example, that this X or Grass coin start to do waves or even more volumes or something, then I would probably be a little bit more confident to increase my order. But for now, so here's another trade on Grass. Again, I got in a little bit earlier, but I let it go down a little bit and then tried to give it another order. So the reason why is because we are in a very kind of bullish environment right now, just for a day, I guess. I'm not saying by any means that the bull market has started. I don't think so. I think not yet. And then so I open up Bitcoin right here, so just to see what Bitcoin is doing, just to kind of get myself an idea of how far I should carry this trade. And again, I'm applying here a lesson that I learned on X, that today coins are going to be bouncing a little bit further than usual. So I'm trying to carry this trade a little further. Ideally, in a situation like this, now I want to see a very fast move up, which I do not see. I see sort of like double top kind of thing, so I decide to just close the trade because it doesn't. So the time is a very big factor in scalping. Like if you have some sort of idea and it's not being executed in in a certain amount of time, it's usually I find it to be better to just exit the trade and take the profit that you have, rather than hoping that it's gonna go your way. So here I'm preparing for sort of squeeze. So you see me change an order for 20K, and I'm hoping that it squeezes really fast past the highs. You can see that there is a quite a large cluster of limit orders at that area, and I'm actually gonna mark the high. So yeah, right there. So what I'm going to do here is that I'm going to mark the highs with a line just to use that as a reference, so that if the Dogecoin, and that's about 10% right there, so if it's going to squeeze past it, I have some sort of reference point of where that squeeze is going to go to, and that's where I'm going to try to short it. So here's that squeeze that I'm preparing for. So I'm hoping that it's going to go past that line for me to short. And it's very important to also see how it goes through the line. So it shouldn't be going slowly. So it should be like an actual proper squeeze. So it should go like in just one single, like in few seconds, it should go just boom past the line. And as soon as it stops for a split second, that's when you short it. It's not going to happen here right now, unfortunately, but because those do have like a very large retraces, what's going to happen slightly different. So stay tuned. It's good. I'm pretty sure it's about to happen. So the reason why I opened up Doge on the spot on the left is just to see where some of the big limit orders are and just kind of see what is the sell and buy density. So I noticed that there is a low density in the order book for purchase on the left, and this is exactly where the retrace starts. So see that right there. Now I should have entered with another buy order here, but that first large retrace, this is exactly what I was talking about, which is very tradable, and I also should have carried it a little bit further. I don't know why I got slightly impatient here because there was no reason to exit here. Actually, I should have carried it much further, at least under like right here. I should have probably closed it, not there, but it's okay. So let's continue. So what I'm watching for now here is something similar. So now I realize that okay, squeeze is probably not gonna happen. What instead is going to happen is these sort of fast accelerations. So I'm looking on the graph already where it might go to. So usually it goes towards most recent sideways trading. So here I see that there's a few a few areas like that. And what I'm going to do here is I'm going to try a trade. So the try here is the idea that was the idea that I had here on that first trade. The idea I had there was double bottom. However, those can be very tricky to trade, and the reason why they can be very tricky to trade is because if you're wrong, you're gonna be very wrong. So you should be very fast to exit. So like you saw what I did there, where I was like, all right, it's not going up. I'm just gonna exit right away. So this is how you gotta navigate those. So here now, what I've noticed is that it's not providing a clean bounce. So I still exited a slight profit. So I'm just kind of noticing. So again, I'm using all of this. I'm using as an information. So what that means is that it's probably interested to go a little bit further. And what like in today's environment where it's providing a bounce is probably when it gives a little bit longer move down and not two moves down at the same time. So right now you saw two waves very close to each other time wise. So what I realize here is that I need to give it some time to kind of trade around and then do that acceleration, or do a third wave down much further. So these are my only two plans for trade, and so you will see that the latter one is gonna happen here in a little bit. And notice that like also the first wave is the one that I should have carried a little bit further, because that first wave is usually the one that gives a bigger bounce. All of the waves down subsequently, like even like right now, if it were to provide a large wave down, I'm not probably not gonna be as aggressive in my take profits. I'll probably exit a little bit sooner, because what could happen is that this is the top, and then it's only down from here. And so when that happens, it's not giving bounces on the way down. It just kind of goes down and then trace sideways, and then goes down, trace sideways. So for now, it's giving the bounces. I should have entered with another order, and then where I'm putting my take profit to, I'm putting my take profit underneath. So underneath that sideways action that we had there, and uh, as you can see, as you can see, there is some sort of weakness. So it's not giving that fast bounce like it did the first time. So I'm just kind of playing carefully and deciding to take profit. Now here is another interesting situation. This is a very similar logic. Um, this is a coin X, I believe. Yes, it's X. Uh, as you can see, the two lines that I drew. So this is me marking kind of the first area of sideways action where a fast dump down might go to. In this case, it didn't quite reach that, so but I still decided to enter, and as you can see, the coin is not really moving up. So I'm gonna decide to exit here and wait for the price to come down into that area that I marked. And that area that I marked is just the first sideways action on the tick chart. So this is where, like in the environments like this, those kind of areas are the ones that provide the balance. So yeah, so I'm not entering at the double bottom here because again I have area of interest right below and I don't have a lot of volume, so there is no indication that the coin will provide the balance. And notice that also the coin is moving very kind of in a chainsaw type of movement. So those movements are pretty dangerous to trade. So this is why I'm doing that with a small order. Because if I'm wrong, I'm just using my risk management strategy that okay, if I'm gonna be wrong, I'm not gonna lose a lot of money compared to that money that I've earned. And then so far I, right here so far I'm about $500 up in profit for like an hour of trading, which isn't too bad. When I trade, I usually aim to make maybe like a 1K per day. That comes out to 20, 30K a month, which is decent right now. And as the bull market starts, I'm gonna be increasing my order size because there will be more opportunities like this to make money. So this is an interesting situation. So because we are in a bull scenario, normally I would have exited right there. However, because we are in that sort of Bitcoin breaking all-time highs situation, and then the coin, based on the previous movements, the coin does provide longer bounces, but it also has chainsaw type of movements. So what I do here is that I decide to not close the trade break even, which is what I would have done normally. This is very important to. So the important lesson here is that you gotta always kind of know where you are in the market. Are you in a bullish scenario? Like for example, if the Bitcoin wasn't breaking all-time highs, I would have exited in that situation. But here, I'm thinking that it will go a little bit further to retest the sideways area on the left that it has established for the last hour or so. And at the same time, yes, I'm looking at Bitcoin to see if the Bitcoin is bouncing or what is it doing, just to kind of guide myself where and whether or not I should exit the trade. So far, almost three. Yeah, so far 3% up on this trade. So because the Bitcoin is still kind of aiming to go a little higher, that's the only reason why I haven't exited the trade. But see how there is a little bit of a sideways action on the left of the chart. And this is exactly where the price went up to. My hypothesis here is that it's gonna go a little bit further, so I decided to wait. A little longer, but I starting to notice that the Bitcoin is kind of curving down as well. So now I'm thinking that okay, well actually my thesis may not work, and we may not see a long move up like we did in the previous scenarios. And if we don't, this will be my last trade on this coin because whenever the coin stops to provide long bounces, I usually stop trading that coin because like the probability of you making money becomes less, and at the same time, well, the only tradable situation in that case would be some sort of like abnormal dump, like maybe 20-30% in just one like in few seconds, for example. That would be the only tradable tradable situation for me. But here, so I see that, yeah, there is a weakness in price, so I'm gonna just on the next bump up, I'm just gonna exit. So I already put my take profit down below. So for that last little bounce, and it's not even giving me that last little bounce. So I just all I see is the weakness. So I just decide to exit. So yeah, this is how I think we made $600 on this session. Yeah, thank you very much for watching. And as you can see, it's gonna continue going down. And now we also see a cool down in Bitcoin price action.